Hello and welcome to this week's Trading in the Trend on Wednesday, the 10th of July 2024. At the beginning of June, we went long the spot gold price, and as you can see here on the daily financial bet, we basically have been trading around our entry level for 3 weeks or so, and then finally the gold price rallied as expected. So here you can see we got in around $2,333 per troy ounce. You can either cash in $40 a profit on here now, or you can let it run. If you do so, I would personally probably move my stop up, perhaps to the last reaction low, which was made on Friday at $2,347 per troy ounce, just to cash in a small profit in case of the trend reversing with regards to the gold price. But this one, if you want to let it run, you can still let it run. Up to you, really. And then what we did in mid-June, we went short the US dollar basket. And as you can see here, we did so at 104.85. We were underwater on that trade for much of June and beginning of July, but we are back in profit at the moment. So here you can let this one run, or if you want to move your stop level to break even to your entry level, you can do that too, to move it down to 104.85, in effect having a free trade on. And then what we also did is we went short New York Sugar and got stopped out on that trade. But we went short again last week because I saw this long-term downtrend line basically coming in around the levels we were trading, which were also tying in with the lows from March, and that's why we wanted to go short. So you can see here we went short at 20.55, which was bang on more or less where the top was last week, and since then we've been falling nicely. So what you can do here with regards to the sugar price, you can just move your stop loss to break even to your entry level, so in case of the market reversing to the upside, you don't get stopped out. But it's likely to fall further because, as you can see here, we're just testing and in the process of falling through this uptrend line at the moment. And then for this week, what I would like to do is to look at Brent Crude Oil futures. Now, these have come off, as you can see here, for the last 4 days. We've seen 4 consecutive days of falling prices, but we're close to support from the late June lows, and also the orange line and the red line, the 55 and 200-day simply moving average. And for that reason, I would like to go long Brent Crude Oil futures around current levels, with a stop loss pretty wide, maybe below 80.45 here, the late May low, and an upside target just below the psychological 90 mark. So this week's trading, the trend is to go long the Brent Crude Oil price with a stop loss around 80.45 and an upside target around the $90 mark.